I think definitely gold will be part of a new monetary realignment. It always has been historically when systems collapse, especially fiat currency systems collapse. And I think that's why the world's been buying gold hand over fist for the last 3.5, 4 years. And that's why all the physical gold is going into the U.S. The people in the know, the elite, the top 0.1%, if you want to call them, they know what's coming. So and Trump knows that he needs the gold to sit down at the table with Xi, the Europeans, and also with the Russians. So, I do definitely see gold coming back.
This potential revaluation of gold within the global monetary system has profound implications. The ECB's analysis indicates that diversification away from U.S. dollar reserves explains 70% of central bank gold buying, suggesting a deliberate move away from dollar-dominated financial architecture. Seasoned market analyst Mario Innecco believes Trump's gold comments hint at a Bretton Woods-style reset. While crypto gets the spotlight, Innecco states gold will play a key role in any new monetary system. As fiat systems weaken, elites and central banks quietly accumulate gold in preparation. High-net-worth platforms are witnessing extraordinary interest in precious metals. Boing Reserve reported a 200% year-over-year increase in gold acquisitions by affluent investors during the first quarter of 2025. These big whales are strategically sheltering wealth from currency fluctuations and geopolitical instability. Mario Innecco says only a global shift to aggressive rate hikes, halted QE, and zero-deficit spending could end the gold bull market, but he finds that unlikely. He points out that the ECB is cutting rates and that Trump is urging the Fed to follow suit. Jerome Powell stated, "Tariffs may add 0.5% to inflation but won't alter our dual mandate focus," highlighting the tensions between political demands and monetary discipline. Sounding the alarm early, Innecco warns that inflation could soon spark a crack-up boom, where investors flee to hard assets. He says that if you have spare fiat, now's the time to move into gold and silver. Based on fundamentals, Innecco says short-term dollar moves may affect gold, but the bigger picture shows gold hitting record highs across major currencies. He views the dollar index as a distraction, noting that all fiat currencies lose value over time. Gold's rise from $85 in 1973 to over $3,400 today proves its lasting strength. The US dollar has been in a long-term decline against gold, with repeated symmetrical triangle breakdowns confirming its weakness. On the other hand, gold has maintained a strong bullish trend within an ascending channel, signaling continued demand. Before diving into Mario Innecco's sharp insights from his latest interview, hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the markets. Let's get into it.
I think the only way the gold bull market could be reversed would be for central banks to act together and say one day all the central banks start raising rates aggressively, stop QE, and also governments getting together and saying we're not going to spend anymore, no deficit spending. But I can't see that happening. We saw the ECB cut rates last week. We're seeing President Trump criticizing the chairman of the Federal Reserve, calling him too late, Jerome, or whatever, that he needs to cut rates. We're seeing the markets discount several rate cuts already. So, yeah, I don't see any end in sight. And eventually, I think the public and investors are going to wake up and realize that there's no end to the inflation. And that's what Ludwig von Mises called the moment where the crack-up boom or the flight to hard assets or hyperinflation, that's when it starts. And when it starts, if you're not protected, if you haven't protected your assets with or your wealth with hard assets like gold, silver. So that's why I don't think it pays to be too cute for wait for pullbacks right now in gold and silver. I would just say if you're fortunate enough to have spare fiat currency savings, and you're looking to buy gold and silver, do it. Yeah, I guess in the short term, it does help gold go up versus the dollar. But if you look at the price of gold in euros and pounds and yen, that's still really high as well, and it's made a new all-time high versus the pound today. And if you look at the dollar index historically, it was an index created in 1973 to measure the dollar versus the major Western currencies, because up until 1973, Elijah, all currencies were had a fixed rate versus the dollar, and the dollar was fixed versus gold. But yeah, it started out at 100 in 1973, and we're around 98 right now, so it's lost 2% in 52 years. While gold, I think, was 85 when the dollar index started trading. So I think, yes, in the short term, it does impact gold. But I think overall, I think it's a huge distraction because it's measuring fiat currencies against each other. And we know, Elijah, that they all end up going to zero. And even if you look back at 2008, when the dollar index bottomed just above 70, gold was at 1,000. And here we are almost at 100, and gold is at 3,400. So yeah, that's how I see the dollar index. Definitely, Besant, he did an interview before the election, and it's on YouTube, and he told the guy who interviewed him that he sees a Bretton Woods-like realignment. And notice how they focused, all the focus was on cryptocurrencies, Bitcoin reserves, or gold, Bitcoin-backed dollar. They never mentioned gold. But what Trump said yesterday about needing gold to sit down at the table to negotiate and calling the shots, I think that's a huge signal that you and I value, but the general public has no clue what it means. And so, yeah, I think definitely gold will be part of a new monetary realignment. It always has been historically when systems collapse, especially fiat currency systems collapse. And I think that's why the world's been buying gold hand over fist for the last 3.5, 4 years. And that's why all the physical gold is going into the U.S. The people in the know, the elite, the top 0.1%, if you want to call them, they know what's coming. So and Trump knows that he needs the gold to sit down at the table with Xi, the Europeans, and also with the Russians. So, I do definitely see gold coming back, because having the dollar, the paper dollar, as the major reserve currency will only make the trade situation worse because of Triffin's dilemma.
Market analyst Mario Innecco mentions the surge in gold reflects decades of currency debasement rooted in policies like Bernanke's helicopter money speech. He believes central banks and nations are waking up, hoarding physical gold, and possibly repatriating it. According to Innecco, we're witnessing a critical moment where all fiat currencies are destined to lose value against gold. He highlights the current gold-silver and Dow-gold ratios as rare historic opportunities. Innecco believes the Dow-gold ratio could eventually return to 1-to-1, reminiscent of 1980, signaling a significant shift. If history is any indication, the sudden drop in the Dow-to-gold ratio could be signaling the beginning of a massive stock sell-off and a major gold rally. The relationship between Federal Reserve monetary policy and the Dow-to-gold ratio underscores an important fundamental. The stock market is subject to inflation just like consumer prices. In fact, monetary inflation often shows up in equities first. In a nutshell, central bank money creation tends to blow up asset bubbles. Let's get back to the interview.
The Dow-gold ratio, I think, yes, it could go to at least 1-to-1. If you look back at the early 30s and then 1980, we had the Dow-gold ratio go down to 2, roughly. in 1932 or 33. And then in 1980, it went 1-to-1. Gold was 850. The Dow was at 850. So we could even have that ratio going like less than 1, which would mean, for example, you could buy one Dow with half an ounce of gold. And yes, we reached like over 40 in late 1999, and it's never retouched or retouched that level. And recently, I noticed that it's broken down, and today especially, I think the handle is 11. For the last 5-6 years, it had been trading around 20. So I'm not saying it's going to go straight to 1 in the next few weeks or months. I think it will take a little longer, maybe a year or two. But it's definitely broken down, and it proves that we're probably not really going to have what we saw. I think we already had the correction in gold. I think the event you talked about when the Dow, NASDAQ, and S&P dropped sharply, and then Trump reversed the reciprocal tariffs for 90 days. We saw that huge rally. So before that rally, gold had taken a hit, and silver, and they rebounded very quickly. I think this is it now, because as we speak here, I'll just have a look. The Dow is down 980 points and gold is up 86. Even silver, which is being kept suppressed by the bullion banks, is up 10 cents. I mean, it was up a lot more earlier, but yeah, so that's the way I see it. The Dow gold ratio, that's an important one as well. And it's not only me who sees that. It's like people like Pierre Lassonde, he thinks is going back to 1-to-1. And it's a combination of many things. I think ultimately it's just reflecting the currency debasement that we've had for almost 25 years. I always remember the speech Ben Bernanke gave back in 2002, November 2002. It was the helicopter speech. At the time, he wasn't the chairman of the Federal Reserve, but he was being groomed to take over Alan Greenspan, and he said, we're never going to allow deflation to happen again, because we've got this technology called the printing press, where we can just create dollars at no cost. And that Elijah, was what really woke me up to the fact that I needed to have silver and gold and silver, and keep adding on to it, and nothing's changed. The only thing that's happening now is that I think the world is waking up to it, especially sovereign nations and their central banks, and they've been buying real physical gold for the last 3-4 years.
Understanding the drivers behind this rally and carefully considering the opportunities and challenges is paramount for investors. The golden era for gold might just be beginning, and staying informed and prepared is your best strategy to navigate this exciting market. As central banks and big investors rush into gold, the real question is, will you act now or wait until it's too late? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos.